Hello, everyone. Today on the final bar, we're joined by Clive Lambert. Clive's from FuturesTechs in the London area, here to talk about the energy markets with us. The S&P selling off pretty dramatically, pretty heavily into the close. Still down only about 1% or so, but earlier in the day, you had this situation with the NASDAQ up, the S&P flat, the Dow down. Everything's rotated lower. So today feels much more about distribution than accumulation. Ladies and gentlemen, this is the final bar. Hey everyone, welcome to today's show, The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us every weekday after the close to make sense of these markets together the best that we can, given the dramatic movements that we're seeing on days like today. But most importantly, try to put days like today into proper perspective. Today, the S&P down in what felt like a pretty significant downtrend, still only down just over 1%, but really accelerated into the close. So, clearly buyers evaporating, or the conviction of buyers going down very quickly, and sellers taking control to push prices downwards. But it's interesting. I was doing a presentation earlier today for the STA, that's the Society of Technical Analysts in the United Kingdom. And I feel like from the moment I started that event, that was pretty much the peak. That was just around 11 a.m. Local time when things start rolling over. So from that point on, it really sort of accelerated to the downside. We're going to look at some of that, especially on charts like Apple, where I feel like what today has done is perhaps made that bearish divergence a little more clear, but we'll have to look at that in a minute. I did want to point out some of the upcoming events, guests, and others that we have on the show. As I mentioned, today we have Clive Lambert joining us. Pretty excited to hear his take. Tomorrow we have Landon Whaley from Whaley Capital Management. On Thursday, Javed Mirza, who's the technical analyst at Canaccord Genuity in Toronto. Next week on the 13th, we have Rick Bensinger from Bensinger Capital Strategies, also the head of In the Know Trader, hosts a show of that name on StockCharts TV. Next week, it's charting the second half. The entire week is focused on a second half outlook, and I'm excited to have Rick on as my first guest. Every day, we're going to have a guest on the show to give their sort of brief outlook and introduce some of the concepts that they're thinking about. Also, as a reminder, next Saturday, so that's Saturday, July 18th, for the end of that week, charting the second half, we're going to do a live market forecast panel. I'll be moderating a fantastic group of strategists giving their take on what's coming next. That's going to be an interactive panel. We'll be able to ask live Q&A of all the guest panelists. So I encourage you to pay attention to that. All next week on StockCharts TV. It's going to be a pretty cool week. Let's get to our market recap. So as I alluded to, it was certainly a distribution day. During the day, midday, as I, sort of mid-morning, I'm checking things out, and it felt like how the market has felt up until now, with technology leading, with the big industrial names lagging, and sort of the S&P kind of in the middle, balancing those two. And that's why the S&P has felt like it's in wait-and-see mode. While today did not break down through some major significant milestone support level or anything, it certainly felt weak. And days like today, when you accelerate into the close, certainly don't make me feel optimistic overall about long-term strength. But let's look at some of the details together here. So the S&P down about just over 1%. Mid caps and small caps down even more. And that's one of the things that we've talked about on the show, is especially looking at breadth in the small and mid cap space. Today, I think it's going to be potentially the beginning of that indication that there's weakness down there. The VIX back up, not quite to 30, but certainly getting closer. Looking at some other markets, bonds were pretty much strong across the entire day, with the TLT, the long bond ETF, up 1.4%. 10-year yields back down to around 65 basis points, 0.65%. Oil down a little bit. If you look at the USO as an indicator, it sort of was in the positive midday, but then back down to close weaker than yesterday's close. Gold was actually up and finished near the highs of the day, with the GLD closing right around 169. So sort of a mixed bag within commodities, but gold, one of the charts we've talked about, certainly continuing to hold in pretty well. So let's look at a chart of the S&P, talk about what today actually did. And the long answer is, or the short answer is, not much. I mean, the long-term perspective This didn't change a ton, so let's not get too excited about it. However, I think it does speak to that short-term sort of tactical weakness. Yesterday was the first day we dramatically broke above 3150. That's a resistance level we've talked about. That's the resistance level from second week in June, third week in June. We hit that a number of times. Pretty clear line in the sand. We broke above that yesterday, and we're right back below it. So as we've talked about, when you have a breakout or a breakdown, I always talk to you about a follow through or a confirmation day. The next day ends up being really important. And I first learned of that concept talking with Tom DeMark years ago about some of his indicators. And it would always be a signal and then some sort of validation or confirmation using something. And it would be, you have to trade a couple ticks further or something like that. And I always found that was really meaningful, because a lot of times things will capitulate into the close. The next day, they sort of, market comes back to its senses. It sort of rights the ship and it comes back down. Unless you get that follow through, really doesn't give you the conviction that that trend is going to continue. So overall, I still think the trend, by definition, has been positive. We're still seeing now a pattern of higher highs and higher lows. Until that changes, I still think the primary trend is higher. But a day like today, going into the close, I think matches some of these other distribution days that have certainly felt more distributive than accumulative, meaning, it doesn't look like people are accumulating during this period. It looks, like a day like today, more profit taking than anything. Let's look at some of the other themes we can tease out today. The number one stock in terms of gaining was Walmart. Walmart actually had a big day coming off of the 200-day moving average. And again, encourage you to look at the news and understand a little more deeply what caused Walmart to move today. But from a chart perspective, we talked actually, I think it was Monday, I want to say, we talked about Walmart being, sort of finding consistent support right at the 200-day. Now with today's upswing, it's taking it above the previous swing high from the end of June. And so it's certainly putting it back into a short-term uptrend, higher highs and higher lows. So a nice kind of rally out of the lows. You'll notice a lot of staples represented on the top 10 gainers list. So Philip Morris PM with a bullish engulfing pattern today. Costco, we've talked about, now breaking above its recent swing high. So a lot of rotation back to the upside there. Plenty of stocks going down. Micron was the biggest loser on the scooter ranking, so losing the most in that relative ranking of stocks. It's funny, while the S&P, we've talked about this consolidation pattern resolving to the upside, this pennant pattern of sorts. Micron's actually going down to the lower end of that pennant pattern that it's been forming, and potentially would start breaking down. We'd have to see if it breaks down through the 200-day, breaks down through support around 47, but potentially teasing that lower end. And semiconductors are a really important group because it tends to be a good leading indicator for the broader markets. Semiconductors tend to do well when the market's doing well also. In terms of markets and what else we can identify, looking at industries, it was really tobacco is number one. I mentioned Philip Morris earlier, so that as a group, the top gainer was up over 2% today. Also mining stocks, gold mining stocks, both up around 2% as well. So there were a handful of groups that actually did pretty well in the positive. Noteworthy groups would be automobiles. So Tesla remains our number one stock on the scooter rankings. The presentation I mentioned earlier to the STA, one of the questions we had at the end was about Tesla, and it's trying to make sense of it's a fair question. What do you do with Tesla? And what I pointed out to them is what I'll point out to all of you here. Finished up over 1% today. I think what's interesting is a lot of stocks have become overbought. What's interesting about the chart of Tesla, because it's rallied so quickly, it's extremely overbought with an RSI above 80. What that usually means is you'd have probably, and it's reasonable to expect a brief pullback of sorts, but usually have at least one more move higher, one more push higher, because the momentum is so strong. So we'd always call this a good overbought. It's not overbought meaning we're gonna pull back immediately. It's more of there's so much upside momentum in the stock. After a brief pullback, you'd expect at least one more leg higher, and I think that's reasonable to expect from Tesla. Again, it's tough to chase something like this, which has gone vertical, and even though today pulled back a little bit, closed below the open, it's still continuing to chip away higher. But overall, I think that extreme positive momentum is what I'd be paying attention to there. But that group, which is the automobiles group, up 0.6% today. On the downside, it's some REITs, so things like hotel and lodging, retail REITs, et cetera. Airlines had a tough day with the airlines group down about 5%. What else is on here? Aerospace as well. So we talked about within industrials, aerospace, defense. Boeing's group has had a tough time for sure at times over the last couple of weeks, and furnishings within consumer discretionary. So a couple consumer groups in here as well. So it was interesting. I mean, if you look at the trajectory, I think the sell-off, the significant sell-off going into the close is pretty noteworthy. We just have another like 30 seconds. So of course I'm tempted to show a couple more charts. I'll try to keep it reasonable here. Other movements, I think, in non-equity asset classes. We're going to talk about commodities in a minute here, but I think it's interesting to note the bond prices continuing to rally. I've heard a lot of discussion about bond yields can't go lower. I've heard all the reasons why bond prices should not go up. But if the price goes higher, I'm going to want to assume that trend is possible. And this is what we've seen with the TLT. You see the trend line that's been broken. You're now seeing a pattern of higher highs and higher lows. Today, we closed right at that resistance level from about a week ago. I think if we continue with that, you're certainly seeing a rotation from short-term weakness to short-term strength, suggesting strength in bond prices. And again, I know all the reasons why that should not go on for an extended period of time. But again, those reasons are relevant if the price continues to appreciate. Gold is the last one. Gold was up pretty good today on a day when the markets were, the S&P was down. You've seen certainly a rotation with the GLD breaking above 165. That was a key resistance level. Now continuing in a primary uptrend above two upward sloping moving averages, not yet overbought, and the relative strength starting to improve. So overall, I think gold continues to line up pretty nicely, and I think there's certainly potential for further upside. Just because we're at the top of the chart does not mean we cannot go a lot further than that. So interesting rotation as stocks certainly have struggled. As the dollar is weakening, you'll see strength in gold, you see strength in bond prices certainly today. We need to take a quick commercial break. We'll be back with my guest, Clive Lambert. We'll see you in a minute. Hey everyone, welcome back to the show. This is Dave Keller here at StockCharts.com. As a reminder, we love to hear from you, love to get your questions, and we're going to have a mailbag segment a little later in the show where we answer some of the questions we've received in the last day or two. You can get questions to us. Best way is via email, thefinalbar@StockCharts.com, and shoot us an email anytime, or on Twitter, just at FinalBarSCTV. Tag us in a comment, and one of the questions from today came over Twitter earlier today, so we'd love to hear from you either way. I want to welcome on my guest, Clive Lambert. I've known Clive for a number of years. Clive's based in the London area, and I enjoyed presenting to his group that he's involved with, the STA, the Society of Technical Analysts in London. Clive runs a firm called FuturesTechs, really focusing on the energy space, works with a lot of institutional investors in his area. Clive, welcome to the show.
Hey, Dave. How's it going?
I'm well. We mentioned earlier before the show started, I feel like from the moment I started presenting to the STA, the market literally dramatically started falling off. So I hope my message of mindfulness and having a proper perspective was well received. But given that, I mean, there's been a lot of questions in the energy space, and I think a lot of eyes on oil prices and how they're evolving. Can you tell us what your toolkit is telling us about crude oil right about here?
Yeah, okay. Well, we are at a very interesting place in crude oil right now. And the chart, I mean, I look at the Brent crude and the WTI, but obviously I'm guessing that most of your listeners are from your side of the pond. So I thought I'd look at the NYMEX WTI chart today. And all we've seen in the last week or so are small-bodied, high-wave, doji candlesticks. Really nothing going on, which is when I put the Bollinger Bands on the chart and wait for them to tell us something. Now, the other thing I'll point out about this chart is that where have we stalled? Where is the where was the high last week? Where was the highs in the last couple of days? Where have we stopped going up? And it is right at the top of that gap from the 6th to the 9th of March, which you can see a little bit further to the left. And that's almost to the tick exactly where this thing fell over a couple of weeks ago and where we're struggling to make any further upside now. Just above that is a Fibonacci level at 43.05. That's important as well. The Brent chart looks very similar. We haven't quite filled the gap in Brent, but it's in that vicinity as well. So for me, this chart says to me, you know, if there's going to be somewhere where the sellers are going to return, it's going to be on that at that gap fill. And so far, we haven't made any more progress higher once we filled that gap, which leads me to believe and wonder and think that the next move will be a break lower. But obviously, you know, as you just said, you always wait for some sort of confirmation, and the Bollinger Bands can help us to get that sort of thing. So yeah. Key resistance hit.
It's such an interesting chart, and I love the confluence that you have of a number of different inputs here, right? So you have the narrowing of the Bollinger Bands, meaning a lowering of volatility, which usually precedes a break.
Yeah.
And then it's approaching key resistance, the Fibonacci level, and also the lower end of that.
And you've got the candles, and you've got, and actually the other thing that's on that chart is the RSI, where we've broken the uptrend line on the RSI. Some people like to draw trend lines on the RSI, and it's something I spend a bit of time with. Again, price hasn't quite agreed with that idea yet, but maybe that's what's coming.
So interesting. It's sort of leaning more on the bearish side with oil prices. Now we talked, if you heard earlier in the show, you know, clearly distribution going into the close in New York here, and I think a lot of people obviously, you know, recognizing that the uptrend feels long in the tooth for a number of reasons, but you know, tech stocks relatively overextended, the S&P at key levels. Tell us about stocks and what you're seeing using the E-minis here.
Well, right. So when yourself and myself, all those years ago, started looking at technical analysis, we were probably given a textbook called Technical Analysis of the Financial Markets by a man I think you know, isn't it? John J. Murphy?
Correct.
Page 97, Island Reversals. Right, I know that because I've got it in front of me. Right now, we had an island reversal between the 5th of February and the 21st of February, which I've highlighted there. When it's a gap on the way up, and then there's a gap at the same price on the way down. Then we got to the next area that I've highlighted, 5th of June to the 10th of June, and the same thing. Right now, I look at the futures prices because my clients are futures traders, but the charts look very similar to the bar charts you were just showing before. But what this chart is I've stripped out the overnight trade, and it's the chart just for the price action when the cash market is open. So that creates more of these these price gaps, especially if you get big moves overnight. And so we've got two island reversals on that chart. Do you know what I'm thinking? What I'm wondering, here's going to be the interesting question for tomorrow, I'd say, is where do we open tomorrow in relation to today's low? Because and it's a big if, obviously, because we're a long way from tomorrow's open yet, but if we open below today's low, that we just put in 31.32.50 in the futures. I think it's around 31.40 in the cash and the index. If we open below there tomorrow, then the last 2 days are going to be an island as well. You know, and that's the sort of thing again. And the highs on those last 2 days have been in that island gap from June. Yesterday's high on the futures was 31.74.50. Today's was 31.74.25, and that island gap resistance is 31.79.75. That's not far away, is it?
Right.
And what I said to my clients over the last few days in the S&P was, look, if the sellers are going to return, it's the levels like these gaps where you could see that happening. And it's tentative still at the moment, but we see some weakness tomorrow, then this thing could start to accelerate lower again, I think.
That's a great take, Clive. Two fantastic charts, and it certainly feels like leaning more, you know, bearish on oil, more bearish on stocks. But as you hit on, we need to get the follow through. We need to get that confirmation that things start to move in that direction.
Yeah, right at this very moment, it's more a case of downside risk needs considering again. If we start to see some confirmation, then right, okay, off we go.
That's well said, Clive. Clive Lambert from FuturesTechs. Thank you so much for coming on the show. Hope you stay safe, and love to have you back on again soon.
No
Right?
worries, Dave. Good to speak to you. Take care.
This is Clive Lambert from FuturesTechs. I've known Clive for a number of years and have always enjoyed talking with him. Number one, when I think about not taking life too seriously, and I think of technical analysts, I know Clive is certainly at the upper end of that list of esteem. But he's a fantastic strategist and a great focus on the energy complex. Actually, I actually had not realized that potential weakness in crude oil prices. It gave me took some notes on his levels there as well. We need to get on to our next segment, which is the final bar mailbag. As a reminder, you're welcome to send in questions to us. We love hearing from you. Feedback on the show, guests we should have on, but especially questions you're facing. And we also ask you polls of you a number of times, and on the StockCharts TV page, through YouTube, through Twitter. We're always trying to ask where you're at with things. It helps us to make sense of the markets as well. And we love to incorporate them into the show. So recently, we asked you which of these scenarios sounds more painful to you, either losing 30% of your portfolio's value, which would put the S&P around 2,200 from current levels, or missing out on a 30% gain in value in a portfolio, putting the S&P around 4,100. So the question is, would it be more painful for the S&P to go down to 2,200 with you owning stocks that whole time? Or would it be more painful for you to be selling stocks, for you not to be in stocks, and the S&P to go up 30%? 4 out of 5 of you basically said it would be more painful to lose 30% than to miss out on the 30% gain. And if you're familiar with that type of question, you probably know what I was alluding to. But this is one of the behavioral theories, one of the first really pieces of behavioral finance that was widely accepted, which is called prospect theory. This is by Daniel Kahneman, Amos Tversky, famous market behaviorists, behavioral finance, really the pioneers of the specialty, who focused on basically prospect theory is basically we experience our potential gains differently than we experience potential losses. And your answer is about 4-1 in favor of the fear of losing is more palpable, is basically the potential for gain or even the potential of missing out on gains is less painful to us, less tangible than losing. We hate losing. It's uncomfortable. This is why, in general, when the market starts to sell off, panic ensues and people start dumping their shares. Panic selling is driven by the answer that many of you gave. So thank you so much for validating Kahneman and Tversky's work. I think your responses are totally fair. I think that represents sort of a cross section of where people are at. And this is why when the market starts going down, it starts feeling really painful really quickly, because we really don't like to lose value. Let's get to some of the other questions from the final bar mailbag. Question number 1, Dave, I watch the final bar regularly. Do you ever use bullish percent indexes? I was looking at it for the gold miners, which is $BPGDM. Do you think it has much value in assessing a possible entry point? Right now it's at 100%. So wouldn't that imply there's no buyers left? It's a really good question. So if you're not familiar with that, and I think you've pointed out one thing that I've put on my own list, which is I need to do a better job of using some of these tools. And I have a running list of rainy day things that I want to spend some more time researching and digesting. And the bullish percent indexes are in that group. I'm familiar with them. I have used them. I think they're important. I just haven't done a great job of incorporating it into my process. If you're not familiar with them, here's how you get to them. If you go to the market summary page, which is you click on charts and tools, there's this big list of things, and you'll see market summary in the right column that goes to this list. If you put it in table view, and on the right, just make sure you switch it to end of day, which is going to take the end of day listings. You go down a bit and you're going to see this thing called breadth or market breadth. Here we go. Nope, next one, bullish percent indexes. Here we go. So these are all the bullish percent indexes that we track. So it's the New York NYSE, the NASDAQ Composite, a bunch of indexes, and it's also major sectors and a couple key groups like gold miners. This is going to show you the current value. You can get a little preview chart, and the best way to do it is click on the X's and O's, which gives you a point and figure chart of it. So your question is, how would you use that? So, do I use it for timing entry points? Certainly not. I bucket bullish percent indexes more as a broader measure of breadth. So similar to percent of stocks above a moving average, or new highs, new lows, or advancers, decliners. I think a bullish percent in a similar way, because what it's basically doing, it's an equal weighted measure of what percent of stocks in a particular universe are in a bullish or bearish signal based on the point and figure chart. So the fact that it's at 100 just basically tells you they're all in uptrends. That on its own doesn't tell me to be worried. What it does tell me is to look at the charts and to think about trailing stops. Think about, as a trend follower, what would suggest to me that that trend is no longer in place. And from a pure perspective, what you look for here is if and when it gets into a sell signal, which would be 3 O's, which means you're down to 94% of the group that are no longer in a bullish reference. They're now in a bearish reference. So at this point, it is basically telling you the group is going well until we break a trend line or something like that, a moving average, or until we go into a sell signal by a column of O's. It's telling you things are fine. I'm hopeful I will spend some more time on that. Question number 2. I'm really enjoying the seasonality piece on the system. How much merit do you place seasonality in your strategic process? Yeah, I saw this question, which was really, really good. If you have a chart list, right, and if you bring up a particular chart list and you click on View List As, there are a couple of things that I think people don't use enough. One is the RRG, so you can actually look at a chart list on the relative rotation graph. You can look at it on a market carpet, which shows you where they're trading right now, or you can look at seasonality. So I brought up airlines, and what you're doing is you're looking at every month, and now I'm going back 20 years, and I'm seeing what months that the airline index closes higher than it started the month. So what's interesting about it, do I use this? Yes, I find it very interesting, and I bucket it with cycles and other things. Is it a primary input for me? Absolutely not, because if a trend is in place, even if seasonally, this tells me that January, February, March are pretty weak months. If the trend is going higher and airlines are going up, I'm not going to sell it because the cycles tell me, the seasonality tells me it tends to be weaker, but it does put it in my head as something to pay attention to. What's interesting with something like airlines is almost every October, after every September, the trend is pretty positive, and from there it starts to get weaker going into December, January, February. So understanding that as a seasonal overlay, very, very helpful, but for me, price is primary. Final one, I'm trying to get a ranking of the relative strength of the components of the NASDAQ 100. Is this easily doable? It is easily doable, and I'll show you how to do it very quickly. Step number 1, go to your dashboard. Step number 2, go to chart lists. Step number 3, you want to set up a new chart list. Step number 4, give it a title, hit create new list. Step number, whatever we're on, where it says add charts to list, you click from group. And we have predefined groups, including the NASDAQ 100, add charts, and you're done. From here, if you just go to the summary page of it, it'll automatically sort it by the Scooter rankings, and those are the top ranked stocks. And then again, it's based on the Scooter rankings, which are essentially a relative strength rating, a ranking using a couple different technical inputs. That's the quickest way that I would do that. We're out of time. We have to move on to the 3 and 3 charts in 3 minutes. Here we go. Chart number 1. Breadth in forms of stocks above their 200-day, stocks above their 50-day. This isn't updated for today yet, and I think going in today, it was interesting that stocks have been reclaiming their 50-day, but still less than 50% above their 200-day. I think when today is all said and done, this number is not going to go up. It might go down a little bit, but overall, again, I'm more bearishly mentally tilted as long as this line remains below 50%. Chart number 2, I thought was an interesting breakdown today. And again, I think a lot of things are going to start changing here potentially, but this relative strength of small caps versus large caps has been an uptrend until the last 48 hours, in which case this has rotated lower. So potentially the short-term trend of small cap outperformance, which has been in place really since the market low in late March, is now potentially breaking down from a trend line using these lows, breaking down through a swing low, sort of indicating a return back to the dominance of the mega cap trade. That's certainly what we've seen with mega cap tech and even things like Tesla going higher and higher, while the average stock, according to this, is rotating lower, especially in the small cap space. What concerns me is this is what you would see at a major top, is you'd see small caps and mid caps break down, and the S&P were the last thing to notice. The third chart of the 3 and 3 is a chart of Tesla. As I mentioned, it's fresh in my mind because I was asked about it at the end of a presentation. It was interesting that out of all the U.S. stocks I could have been asked about by a group of British technical analysts, the number 1 was Tesla, which is not surprising because it's certainly been in the news and it's certainly been on a run. So overall, the take is it's extremely overbought. That means you'd expect a brief pullback, but overall, potential for at least one more move higher here. That's our show for today. I want to thank Clive Lambert from FuturesTechs joining us late in London to be on the show today. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.